All right, DXY analysis from a crypto TA guy. For anybody who might land on this video who is not a crypto person, just take a look at what I have, because you will not see DXY's chart the way I have it set up, and I guarantee you, maybe you won't like it enough to use it, but you're going to like what you see on my chart. And you will not have seen it done this way ever. All right, so look at this. It's gotten close to hitting the rather obvious target of 115 to 120. 120 being the horizontal from back here in 2001. So between 115 to 120 was my target. Didn't quite hit it. So the question is, when do you assume it's not going to hit it soon? That is baked in. It could have a deep pullback and then hit that level later. But that could take like 2 years, right? So there's a big threshold of difference between eventually hitting it, because it'll take a long time, right? It probably goes sideways for a while, and maybe even sloping down for quite a while, like 6 months, but still be macro bullish, right? But so it might be more important to identify the more immediate stuff. Is the immediate aggressive trend changing, and it needs to have a compression move before deciding up or down. So let's go take a look. Has that specifically happened yet? And if it has, then we can shelf this for at least 6 months, because it ain't gonna happen if we get that condition / threshold. I think I already know what the threshold is, so let's dive in. All right. I am going to use the weekly 10. Ooh, that's a nice line too. Is that my daily 21? Oh, that's the weekly 21. I actually have not looked at this with the weekly 21. So look what happened back here in 2009. Went from top of the same range to the point of control way under the, and this is the 2-day chart, way under the weekly 21, and then went higher, which is pretty normal. So if you take off the EMA, that's normal. Top of range, middle of range, back to top, that is common. It doesn't matter if it's the price of oil or black market testicles, doesn't matter. That's common stuff. What's not common is going that aggressively below a major EMA and then making a higher high. That's a little wicked. But structurally, it's actually just normal for the definitions of a range. So one convenient tool to use here would be the weekly 21. As long as it's over it, technically, it seems like this is still on the table in a moderately immediate sense. If it breaks below there, then you're going to watch for a bounce in the point of control. But you're going to shelf that for probably 6 months. That is one way to look at it. To try to front run that, use a smaller EMA, the weekly 10. And you can zoom in down to the even 1 hour using the weekly 10. See how it beautifully, actually, frick it. Let's go to the 5-minute chart, watch. So you could tell here that this line, this EMA, is obviously what is creating a significant amount of buying and selling, just the action, the movement of this, right? Very glaringly clear. So if in the next couple weeks or days, it looks like it might happen in days, being on the 5-minute chart here, small candles, throw on the weekly 10 with an MTF EMA indicator, so you can have the weekly stuff on here on small candles. If you see price, do something like it did here, but coming from below, then it's probably going to break up. So if it can get above it and do anything similar, like this. Oh, I took too much of it. If they get above and do something like that, then I would say that it might be more probable 115 will be hit within the next 6 months or months. But if you start seeing rejections and then it takes out one I would say if it gets rejected and takes out 110.47 or this wick high here, then I would shelve the thought of 115 for a couple months, but not quite 6 months or a year, because if it gets rejected, takes out that wick high, then you have the weekly 21 down below, which it could still bounce off of, then make the higher high immediately. So what might happen here is you might have a compression move specifically between this horizontal of 111 or the weekly 10 and the weekly 21. And it might not make a decision until the weekly 21 is closer to 110. That might be how this moves. It might. So to get a decision up and down, up or down, just continuation to one side, it might essentially fill out a triangle right here. That looks like a pretty likely price path. I don't know if that's my favorite price path, but that is definitely, that's probably going to be in my top 3 price paths of how this will move over the next the next 2 months. So this line right here and the weekly 10. So this horizontal in conjunction with the weekly 10, going to be very, very important. Extremely important. So conversely though, like I said, even though it gets rejected, you're going to have this that could then make it come back, right? The same thing applies, but reverse for the upside. Just because that condition is met, that it uses, the weekly 10 as support, I would be on the lookout that it uses this as resistance, then breaks back below the weekly 10. And then if it gets rejected, then it's almost definitely going to come at least hit the 21 or lower, the weekly 21 or lower. So if you're making trading decisions off of this, just realize using this as support might not accelerate price right away, or this going up right away, because you have immediate resistance. So that's why I would use this horizontal with this in conjunction, and anything in between is a shade of gray, right? Like not definite. So therefore, using this as support is not a definite thing until it gets above here, right? You don't have great odds. And then what else have I looked? Yeah, so the weekly 21, the weekly 10 in conjunction, the EMAs in conjunction with 111.40. The idea that it might compress to wait to make a choice for a continuation up or down until the weekly 21 is a little higher. And it might use that as a compression move. Whether it goes up or down from there, I don't know. But just over the next 2 months, I would expect this could happen sideways. So the conditions for down are you go below the weekly 21 and use this line from the range that's like 12 years old. So they're right together, right? So if price goes below both of them, uses either as particularly the line as resistance, then it's going much farther down to 105. Yeah, it'll go to 105 over the course of or 106 over the course of the next 2 months. But that doesn't become probable until both the weekly 21 and this line have been taken out. So I would use the weekly 21 in conjunction with that line that you might go back on this video and draw and pause it. So just like I would use this horizontal in conjunction with here, shade of gray between, I would use the weekly 21, this line, shade of gray between, for my conditions to be bullish on it or bearish on it. Those are my triggers. In terms of price path expectations, I would also expect it to potentially just fucking move sideways for 2 months. And those are conditions for continuation up, reversal down, and my guess on how it might move outside of that and bore everybody to death and do absolutely nothing. There you go.